Hello everybody. So in this video lesson we will see how from cross currency transaction we can gain, it can lead to any profit or loss from that type of transaction. Yeah. Let us see one illustration. One bank sold Hong Kong dollar 10 million value. They sold 10 million Hong Kong dollar spot to their customer at INR 5.70. Yeah, rupees 5.70 is equivalent to 1 Hong Kong dollar. So at that rate they sold 10 million Hong Kong dollar, and then immediately they covered itself in London market on the same day, meaning immediately through London market they have bought back the Hong Kong dollar. Yeah. So that point of time exchange rate where 1 US dollar was quoting Hong Kong dollar, bid rate 7.5880, ask rate 7.5920. So this is the rate was quoting in the London market, and local interbank rate for US dollar was quoting 1 US dollar equals to INR 42.70 bid rate, 42.85 ask rate. So we need to determine what was the cover rate, meaning what is the INR per HKD rate which the bank covered itself. Yeah, what was the cover rate, and we need to see whether there is any profit or loss in this transaction. So clear? Let me repeat once again. The bank sold Hong Kong dollar, 10 million Hong Kong dollar to its customer. In the conversion rate was INR 5 rupees 70 paisa per Hong Kong dollar. So after selling Hong Kong dollar, they got INR. Then immediately they covered themselves in London market on the same day, meaning they bought back Hong Kong dollar from London market. Now in London market, US dollar versus Hong Kong dollar rates are given. 1 US dollar equals to Hong Kong dollar 7.5880 and 7.5920 two-way quote, right? Bid and ask rate. And local interbank market rate for 1 US dollar was quoted rupees 42.70 and 42.85. So we need to see that what was the cover rate, meaning when he is buying back the Hong Kong dollar in London market, what is the rate INR per HKD, and whether there is any profit or loss incurred through this transaction. Yeah. So exactly what happened here. Bank sold Hong Kong dollar to its customer, then cover itself. Bank buying back HKD from London market. So when they are buying HKD, then relevant rate would be the ask rate. Am I clear? In my earlier video lessons, we have seen that thing based on the transaction, which rate is relevant and when, right? Here, bank is buying to cover itself Hong Kong dollar from London market now. So, the relevant rate would be ask rate. Now, let us see the sum. For our convenience, I have copied the rate what was quoting. Now, the cover rate we have to determine rupee or INR per HKD. What is that rate? We have to calculate INR per HKD because bank is covering itself through buying back HKD, Hong Kong dollar from London market. So we need to determine this rate INR per HKD and relevant rate. Yes, you are right. It would be ask rate. We need to determine that. Now, oops. So this is ask rate. We need to determine that. But we have combination dollar, US dollar, Hong Kong dollar, US dollar, INR. So we need to determine this cross rate, INR per HKD. So how to determine that? This equals to INR per USD. Definitely ask rate we need to, because we need to calculate ask rate of this combination, right? So INR per USD ask rate and then USD per HKD ask rate. If we multiply this two rate, we will get INR per HKD. Here INR per 1 US dollar ask rate. Here US dollar per 1 HKD. Yeah. So US dollar will be strike off. I will get INR per HKD. And why ask rate? Because the bank is covering itself through buying Hong Kong dollar from London market. Now, INR per USD ask rate. Is that given? Here, 1 US dollar, here, 1 US dollar equals to 42.70 and 42.85. Per dollar, this is the INR which I want. INR per US dollar ask rate. So what is the ask rate? Ask rate is rupees 42.85. Right? Now, here we have to calculate ask rate. Here, US dollar per Hong Kong dollar. US dollar per Hong Kong dollar. I have 1 US dollar equals to how much Hong Kong dollar? But I need 1 Hong Kong dollar equals to how many USD? Here. So this is the reverse of this, what is given. Yeah. So it would be, I have to get USD per HKD ask rate. As we have seen in my earlier video lesson, in this case when it is reverse, that means in order to get ask rate, I have to do 1 divided by HKD by USD. That ask rate is required. How I will get that ask rate? It would be, let me copy this. Now, what is this ask rate? 1 by HKD. We can write this also. HKD per USD ask rate. 1 by HKD per USD, because I have HKD per USD. This is given. Yeah. So I need to get USD per HKD. So in order to get USD per HKD, I need to do inverse of this. So 1 by HKD per USD. Yeah. So now in order to get this ask rate, I have to 1 by this bid rate. So it is 1 by 7.5880. If I do inverse bid rate, I will get USD per HKD ask rate. Am I clear? So it would be 7.5880. So this is 1 HKD equivalent to this many USD. Yeah. So we need to multiply these two. Let me put formula 42.85 into, or I can this. So if I multiply this into this, I am getting 5.64. Let me write here. This is INR, sorry, it is taking formula. INR 5.6471. So that means, in other words, I can say INR per HKD ask rate means 1 HKD equivalent to 5.6471. So when the bank covered itself through London Bank, they bought HKD at this rate. So what we have done here, we have calculated cross rate. INR per HKD ask rate is 1 HKD equals to rupees 5.6471. This is the ask rate because bank is buying back the Hong Kong dollar. Now let's see whether they have gained or loss through these transactions. So rate at which the bank had sold HKD to customer. What was that rate was? This was the rate. Bank sold Hong Kong dollar 10 million at the rate of rupees 5.70. So rate at which bank had sold Hong Kong dollar to its customer is 5.70. Rate at which the bank has bought HKD from London market. What was the rate? Which we have calculated. This rate bank has bought rupees 5.6471. Yeah, 71. Yeah, correct. So let's take 4 decimal. That's enough. So this is second time buying rate. This is selling rate. He bought at lesser price. He sold at higher price. Definitely he is gaining. Oh, who is he here? Bank. Bank is selling its customer at this rate 5.70 INR. Bank covering itself from London market and buying back Hong Kong dollar at this rate, which is 5.6471. So definitely gain, right? Gain per HKD sold to its customer. So let me put formula 5.70 minus 5.6471. So 0.0529 its gain. So now how many HKD Hong Kong dollar sold? 10 million. Yeah, if I'm not wrong, let me check. This is 10 million. Yeah, so Hong Kong dollar sold 10 million, and per Hong Kong dollar gain is 0.0529 rupees. This is INR. Yeah, let me remove formula here. Hong Kong dollar sold 10 million. So total gain to the bank, it's nothing but HKD 10 million into rupees 0.0529. Yeah, so let me put formula here. So this is 10 million into 0.0529. So this is rupees 5,29,000 is gain for the bank. Yeah, 529,000 rupees it's gain through this transaction. So that means what we have seen, because of this cross currency rate, from these transactions bank has gained to cover itself at a lower rate, and selling it to higher rate bank has gained. Yeah, so this way this is called arbitrage gain. Yeah, in my next video lessons we will see more illustration in terms of cross currency rate, that how we can gain or we can incur loss also. If the buying rate would have been higher than selling rate, definitely you would incur loss. Yeah, so in my next video lessons more illustrations to follow. Thank you.